Hello everybody and welcome back to the channel. I know it's quite some time since we published our last video, but some great events has happened. I have been blessed with 2 small babies, and it's therefore obviously not easy to both balance that new part of life as well as a full-time job. So that has meant that we had to compromise a bit the channel, but we hope now that we can slowly start to restart with some videos, perhaps not as frequent as we used to do, but at least a video or twice a week. So we thought today that it would be interesting to take a look at one of our favorite stocks that we have covered in several videos, and that is obviously Enphase, as you can see here. And for the ones who are not too familiar with Enphase, we would really recommend you to go back and see our old video to get an understanding of what it is that Enphase is actually doing, what are they delivering, because it's an extremely interesting company in the solar industry. So please check the link in the description for that specific video. For the ones who have seen our previous video, we thought it would be interesting to take a look at the wrap-up that we did of Enphase. And basically what we said, that some of the pros were that their financial numbers have improved significantly over the past years. They have some interesting integrated products that is being widened out to the wide part of the world. And obviously they're part of an industry that is expected to continue to grow significantly in the future years, as we are part of this big energy transitioning from fossil fuels to more renewables. However, there was also some cons. Some of them were that they do not have any manufacturing capabilities overseas, which means outside of the US they do not have control over the sales process. They have some strong competitions within their microinverters, and the PE and price to sales ratio was relatively high. So what we said at the time was that despite us really liking Enphase and seeing a bright future for them, we felt at the time that they were priced as a tech stock and not a solar energy stocks. And again, in the past, the solar energy stocks have not historically been able to live up to the expectations. And we do understand that there was a shift at the time. Last year, Biden became president. There was a lot of nice movements within the sector. However, we also said that if the market shifts or the growth slows, there will come a big downward pressure on the share price. We entered into a position when the share price was around $120, and we sold it off when it was around $150 plus US dollars a share, because we thought it was starting to look a bit expensive. What actually happened was that the share price continued up until the beginning of 2021, where the share price was up at 229.04. However, since then the pullback has come, and it has come really hard, and there's different reasons that we're going to cover in this video for why there has come such a significant pullback in the share price. Today it is in 134.70. It has had a pretty good run over the past 2 weeks. However, the trend at the moment is still downwards for Enphase, unfortunately. So in our previous video, we covered some of the potential risks that Enphase could face in the future, and one of the things that we really focus on was that they do not have internal manufacturing capability. This is an active decision that Enphase has taken. They have said, okay, we're going to outsource this to third parties who's going to handle everything, and that's good perhaps from a financial perspective, because it means that you have a low capex and you do not have a lot of money tied up into fixed assets. However, it could also mean that you expose yourself when there is problems down in the supply chain. And by having this model, Enphase is obviously much more reliant on their supply chain third parties, some of the companies which delivers key components and products to them. And in certain cases, there's very few of them. Sometimes there's only one. So again, if there is an issue, this will have an effect all the way up to Enphase's ability to meet the demand of their customers. And over the past month, similar to a lot of other industries like the EVs, Enphase is also facing a chip shortage within the semiconductors. And more specifically, they have constraints in what they call the application-specific integrated circuits, the ASICs, and the AC field effect transistors, FETs. Again, we're not here saying that this is something that Enphase should necessarily manufacture themselves internally. We do not have the expertise to state that, but it's just an example of when things go wrong, it may mean that they do not have any ways of changing this. Enphase says that they're not able to say, like many other companies, how long this shortage is going to last, but they hope that it will improve in the second half of this year. What is interesting is obviously that they have said that they're not willing to raise cost to get the chips faster, for example, through other shipping channels. The two other reasons that we see for the sharp decrease in the share price is one of them is the sector rotation that has happened where we have moved away a bit from tech over to more value stocks, which will benefit more as vaccines are being rolled out and as the economies are starting to open up. And the second point here is that we think that Enphase has been punished a little bit for the sharp increase in the renewable sector in general, and by that we mean, and we've said that in many videos, it almost didn't matter what you were delivering as a company. If you had the stamp of being part of the renewable sector, it means that your share price should shoot up dramatically. And we think that Enphase is one of the companies who has actually delivered quite well and continues to deliver, but we still think that because of the whole renewable went up a little bit too fast, obviously there had to come a pullback at some point in the share price also for them. So now you may wonder, is it all doom and gloom for Enphase? And obviously from our side, this is not the case. We actually think that still Enphase is a solid case in the future, and there's many reasons for why we think this is the case. Some of the good things that is happening and some of the good things that is coming. Demand is still increasing, not decreasing. They have a problem with supply of chips. However, it's not the demand from customers which is the big problem. That is still growing. They have proven that they can capture market shares from the competition. They consistently beat the quarterly expectations. They have put in a 500 million share buyback plan. How many renewable companies are actually doing this these days? Most of them are asking for more money. So this is obviously a very good news for Enphase. They keep expanding into new markets. They have new products, partnerships and acquisitions. They have done two recently, the solar design services and the Softdesk Inc., which further enhances their capabilities in different areas and the product offerings that they can give to the customers. And obviously that's one of the benefits of Enphase, that they have a huge integrated offering that they can give to companies or customers in general. It's not just one single product, it's a complete package that they can come with. On top of that, the storage business, as far as we can read, is doing well so far. It is growing, and the price that they have been able to get in the beginning was quite good. They have we have read that they have cut it over the past week, so now they're more on par with some of their competitors. So again, we would expect that demand would keep on increasing for the product going forward. In general, they still has a huge market to tap into, and the solar industry is still in its early stages. I mean, it's still a very small part of the overall energy part, and more specifically the microinverters are a small part of the solar industry, so there's still huge opportunities for Enphase to capture more of the addressable market that they have. And finally, there's obviously the potential of the IQ8D microinverter launch, which will also be a breakthrough technology. So obviously we hope that that's going to come in not too distant future. There's no clear indications on that. However, this could also be a game changer in the future. So where do we stand on Enphase? Well, we thought it would be good to take a look at what we call the new verdict. From a pro perspective, nothing has changed there. It's actually improved, as we just mentioned, with a lot of the different elements that we just ran over. The business case, at least in our opinion, is more solid, and Enphase looks like really having a bright future ahead of them. On the con side, on the one we touched upon in the previous video, obviously on the manufacturing capabilities, they are still exposed, but that's just an active decision that they have taken. They have strong competition, but our understanding is that in the US they are gaining more and more market shares, which can be either because their product is simply just superior to the competition, or there's more value overall from a price perspective versus the performance. The PE ratio is still relatively high, but the price to sales ratio has decreased, which is obviously a good thing, because this is an indicator that is becoming more realistically priced. However, overall the price to sales ratio is still relatively high compared to what we would see otherwise in the industry. So we still really like Enphase Energy. The price, in our opinion, has come down at a more acceptable level. We had a comment from one of our subscribers in our previous video a few weeks ago, which asked where was our position on Enphase, and we said that we thought it was a good time to accumulate. This was around when the price was around $115 to $20 a share. Since then it has bounced up a bit, as we talked about earlier in the video. We think that in the next quarters there still may be some unpleasant surprises on the chip shortage, and we think it could come under pressure again and fall a bit back to the 120-ish range. where we think that that's a better buy opportunity that will come at the time. That being said, we would not be concerned to accumulate shares today for the long run, as we still believe that Enphase will be one of the companies standing as the big winners in this energy transitioning. There's simply so many good things happening for this company, and they're taking a lot of right choices, and we think from a long-term perspective the share price is definitely going to appreciate a lot more. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. We really hope you will like to subscribe for future content. Again, as said earlier in the video, we hope to be able to post more regular videos, but it is a bit challenging these days with two small warriors coming into my life. And at the same time, please give us a like. It really helps with the algorithm. Please leave a comment in the comment section. What do you think about Enphase? Do you think that they have a bright future ahead of them, or do you think that there are some aspects that we have not covered in our videos which we should? If you have any suggestions for future videos, please also let us know. We will be happy to take a look at them, at least if it makes sense and if it's time-wise can work under the current conditions that we are at. Besides that, there's not much more to say. Then have a nice day, stay safe, hasta la vista, baby.